Hey everybody, Gary with Basecamp Trading. Let's take a look at trading the 30-minute chart in high volatility periods. This is a 30-minute chart of the ES futures, and as most of you know, I run the afternoon session. In the morning, we had a fairly decent rally in the ES. Stocks are just way overdone. This drop has been hard, strong, and fast to the downside and has come a long ways. So we're actually expecting a potential bounce today. And we did get that a little bit during the morning, but then during the lunchtime session, things started to turn around. We typically don't do much trading, and I personally almost never take a trade between 11 and 12:30 Central Time, which is 12 and 1:30 New York time. I am Central Time, so all the times on my charts will be Central. But during the lunch time, the ES pushed up, got up here to the 50 EMA, found resistance, and then dropped, leaving this gravestone doji right here. And then the 12:30 to 1 o'clock bar, which is when we start trading again, actually triggered that to the downside. And that triggered actually underneath 30.79.5. When you're trading a 30-minute chart, you take your trade, and now while it's a slightly larger stop in this kind of volatility, sometimes you may want some room. So if you have a larger account and you're okay with some larger stops, the 30-minute chart is not a bad way to trade. Trigger your bar to the downside, stop goes a couple ticks above the top of this bar, and then you just trail each bar to the downside. And if you had trailed all the way through the afternoon, and this chart was just bearish all afternoon, a little whippy. The smaller time frames would whip you around a little bit, but on this time frame, you can see you just pushed lower and lower, and you never were taken out. This bar, the high of that bar was 52.25. The high of that bar was 50.5. That was the closest you came to your stop, and just trailing your stop all the way down right into the close, you had the potential to take as many as 100 or more full ES points, which is $50 per point or $5,000 per contract. And sometimes that's not a bad way to go, because again, your smaller time frame charts, even your Unirenko charts, which is definitely our primary trading chart, you can really get whipped around a lot. You can see the ES was definitely bearish, and we had lots of continuation setups to the downside, but you can see lots of whipping around too. Down, back up. You whipped around here. You actually made a pretty decent pullback right here. So the smaller time frame charts, and these Renko charts are smaller time frame charts, you can see will whip you around a lot. So in high volatility periods like that, there's an advantage to trading the 30-minute chart. Again, you just trail each bar, and you have a potential to make a nice trade to the downside in the ES today.